I'm going to talk basically about two things. Number one being the daily setup. Then I'm going to try to touch a little bit about the levels so that we get the trends in which we trade daily setup going along with our levels and how these two things move together. So with that being said, let me start by illustrating a daily setup. So first of all, what I want to say is you don't trade all the pairs. You trade specific pairs. You choose, because this method works basically on everything, including indices like Nasdaq, only that there are some variations when it comes to indices like Nasdaq. Right. So as for me, my personal favorite is number one Euro USD, number two Nasdaq 100, and the last one is AUD JPY. These are my personal favorites because they move very nice. They move in a way that I really like. So these are my three pairs that I trade, and you can actually make profits by trading just one pair. Okay, so let me start by explaining the daily setup. The daily setup, the market maker day, starts with the consolidation, which is the Asian consolidation. It starts with the Asian consolidation. So a day starts like this. This is Asian. This is Asian, right? The Asian session. Asian consolidation. So it's a phase of a daily trend. It's a phase of a daily setup. Consolidation. It's a phase of the daily setup. Consolidation. Right. After this consolidation, this is phase number one. You can consider consolidation phase number one. It drops or it rises, breaking out from the consolidation box. As I always say every day, put yourself in the shoes of a dealer and ask yourself a question. If you were a dealer, what would you do to make retail traders lose? Because this is where they get their money. So if you want to trade the way they are doing, if you want to move along with them, then you're going to trade like them. Right. So here, put yourself in the shoes of a dealer and ask yourself, what would you do to make retail traders lose? Consolidation, day started. Consolidation ends, they break. And every retail trader knows that breakout, this, what do they call this one? Breakout. So what they're going to do is they're going to take positions here. Breakout traders, they're going to take positions here. Breakout traders take positions, then it drops, right? As it drops, they put stop losses. Breakout traders, they put stop losses. Remember, this doesn't move. They put stop losses. Breakout traders, right? It drops, stop losses, they're taking sells, stop losses, they're taking sells. And this is what happens. They trade, they put stop losses. The stop loss, it comes back, it hits all the stop losses, it takes them out. Right. So this is phase number two of the day, the stop hunt phase. Accumulation phase is they're accumulating trades, wrong trades, trade moves. They're accumulating wrong trades from retail traders. Then after they accumulate, they do a stop hunt, a hunt for all the stop loss. So you can consider accumulation is phase number two. Accumulation is phase number two. Stop hunt. What happens here? Takes too much space. Stop hunt. This is what's happening here now. When they are hunting for the stop losses, tries, they hit the stop losses, they see stop losses being taken out, they take more sell positions here because basically it may look like a breakout and the retail. They take sell positions here. Retail traders are taking selling positions. Drop again. They're taking sells and others took buys here because retail traders, there's always this way of not seeing things that are clear, things that are in front of you. Taking buys here and more stop losses are taken out here. Buy stop losses, they're taken out. Then they get to this position now. which is the second leg of the daily W. In a bearish scenario, it would look something like this. In a bullish scenario, it would look something like this. We are here now, but here we are talking of a bullish cycle. This is a bearish cycle, right? Now we are at the second leg of the W. Can you all hear me clearly? Can you hear the sound and see the video clearly? You can just show me by typing a Y in the chat box. Okay, fine, cool. Let's continue. Fine. Okay, so now we are at the second leg. This is where the trends begin. This is where the trends. Remember, this is a trend like that is visual, that is visible to everyone else. But this is where the daily trend begins, because from this one now it reverses. And this trend lasts something like 6 to 8 hours. This trend will last something like 6 to 8 hours. This trend here. Right. So this is where your buy is. This is where the smart money buy is. This one. It go along hitting all the stop losses that were left, taking all the sales out, hunting all the stop losses, and getting all those retail traders out. Do we understand the concept? Do we understand how the daily pattern looks like? Do we understand it? Cool. Fine. So the daily setup, it rises. Then 6 to 8 hours of a trend, it now drops or forms a consolidation to end a day. So this is basically how a day looks like. A bullish setup. Bearish setup is just an inverted of what I've just said. Remember, it may not be so clear. Sometimes this may have variation. Sometimes it may look like this. Consolidation, Asian, it drops, then it rise. But it's still the same setup. Look, drops, forms a W. Remember, when it comes to this point here where you take your trade, you must look at the price action. I'm talking about candlestick patterns. You must pay attention to the TDI, Traders Dynamic Index. You must also pay attention to the daily highs and lows. I'm talking about yesterday high and yesterday low. Okay, I'm gonna talk more about these in detail when we go to the actual chart. I'm gonna touch on these ones more when we go to the actual chart. Right. So now let us visit the chart so that we can see these things clearly. We can get to see these things on a real chart. So I'm gonna visit Euro USD. Can I clear this? Is this understood? Do we still need this information on the screen? Can I clear this? Okay, fine. I'm gonna clear this because I think people have understood. Now, let's check out Euro USD. Looking for a good setup. Let me search for a good setup. Check here. Check out. On this day, remember our Euro USD 15-minute chart. Look, on this day, the consolidation, the Asian consolidation. Look how the pair was consolidating. Let me get my pen. I'm gonna put on my favorite color, yellow. Look, the day started well in a consolidation, and this is what happens. It drops the consolidation. Breakout traders attempted to take sell positions here. It shows dropped again. Right. Taking out all the stop losses of the sells here, taking them out, and all the sell positions are being taken out. Others who entered buy here, they're also taken out here. Then this is where the trend begins. I'm left with 10 minutes. So I'm gonna rush quickly. This is where the trends begin. So the trend began here, and it was, if you calculate these ones, 6 to 8 hours, as I said. 6 to 8 hours of trend. Now, let me quickly look at the confluences. Let me quickly look at the confluences which you need in order to take this trade. Let me just search for another setup before. Anyway, you may want. Anyway, because this happens most of the time. So let's look at yesterday, Euro USD consolidation. Yeah, this was yesterday. Consolidation. I actually traded this. It dropped. It dropped. It tries now to the reason again to start the daily trend, but the accumulation. Remember, these guys when they are doing the accumulation, they want to reach a certain target amount. So if their target amount is not set, they drop back to the level, but that doesn't change the daily trend. The daily trend is bullish. It will still go up. So if you had a buy here, the smart buy, then you see it drop. You can take another smart buy again here. Then it goes along with you. Right. Another setup, bearish one this time. Consolidation, broke out. It rose. It didn't do much. Rose again. Then bearish setup. This is where the smart sell is. Then you're looking to sell. I won't be able to explain levels, so we'll touch levels on another time. Right. Now, these are the confluences that you have to look at in order to take a trade now. These are the confluences. Number one, let me look for a day which had a very clear setup like this one. I actually like this day, like this one. Number one, when you want to take a trade now, the confluences that you look at in order to take a trade. This day also was good. Consolidation, it drops, it rises. It drops to here. Now you assume that this is the second leg. First of all, it has to be at a certain point close to this line here, this blue dotted line. This blue dotted line indicates the low of yesterday. This blue dotted line indicates the high of yesterday. So this is why I call them yesterday high lows. Right, so this one indicates the high of yesterday, this one indicates the low of yesterday. So when this W happens anywhere close to this dotted line, consider it. Right, confluence number one. Confluence number two, you have to look at the candlestick patterns. This is where you are given now good candlesticks that indicate the change of trend. Like for example, here I have a good hammer. Then the trend begins. Confluence number three, I'm rushing because of time. The TDI, the green line now being the signal line, will now cross over to the red line and will also cross over the market baseline, the yellow. Okay? These ones, it now does something like a crossover. Then when it does such of a crossover, that's where you take your buy. You can take your buy here, waiting for a crossover because the indicators are a little bit lagging. You can take your buy here, but I'll teach you a way whereby indicators will not. You take advantage of the lagging of the indicators in order to make them go even further before the candlestick starts, because that's another lesson standing on its own. Right. So here is now where you're looking to take your buy and you go along. How long do you hold? That's a question that I usually get. For beginners, I advise them to hold. You see, the moving averages. The red one is the 13. I always say this. The red one is the 13. The blue one, the water, is the 50. Then we have this one, the white one, which is the 200, and this is the 800. If you are trading the daily cycle, hold for as long as the candles are not. If it's a buy, hold for as long as the candles are not closing below the 13. So these ones, they are closing above in a buy. They are closing above. Keep holding. They are closing above. When they close below, for example, in this scenario, that's where you are closing. And how many pips are we talking about here? How many pips are we talking about here? If you took your buy here, then you closed it here. 58 pips. That's good. That's good. On $1 a pip, that's 58 bucks, which is good. Right. If you take 2 trades of dozens or 3 a day, depending on your trading plan. Don't trade without a trading plan. Don't target trades in dollars, right? You just hold as long as but I'll teach you a good way of holding. But for beginners, it's okay to use the 13 period moving average as your guideline. Here it only dropped down, but it closed above, so That's why I'm saying it's a secure way of holding. I've left with 4 minutes. Do I have any questions? Any questions? You can say them. Don't type in the chat room. Say any questions. Any questions, please? Any questions? Any questions? Any questions? Any questions, please? No questions.
Are you there?
Yes, I'm listening.
Yes, please. Is there any specific time frame for the strategy?
The 15 minutes for this one, 15 minutes. But we will now, so we'll go to the 1 hour. Then we look at which are we following, because on the 1 hour is where we see the levels. So on the next video, we're gonna.
Okay.
If we are going on a level of drop, 3 levels of drop, meaning to say looking at selling positions, the graph will also be giving bearish setups on the 15 minute.
Okay.
Look at this good setup. Vision.
Yeah.
Then it dropped, stopped, dropped again.
Okay.
By second, look at patterns here. We have an engulfing setup, and we also have let me clear this flashing time.
Okay.
Set up here, signaling a good buy. Then
yes,
you hold for as long as the candles are above the 13 period. This one, there was a lot of accumulation. This one, that's why the trend was not. It's okay.
Okay.
All that goes in price. Because people stop loss.
Okay, so we use the 1 hour time frame to denote the basic levels, and then use the 15 minutes for entries.
Yes.
Okay. So I was going to ask again: does this concept apply to all forex instruments, including indices on binary?
Yes, I use this on binary, but there is always a special way when it comes to indices. I use it for indices. When it comes to indices, there is a special way of doing it, which is a little bit different from the way, like for example, here you can see my BTMM is loaded. I'm on a 10-minute time frame. There is a different way of doing it when it comes to indices on binary. I'm left with 1 minute.
1 minute.
I'm left with a minute for this lesson.
Okay.
So with that being said, let's call it a closed chapter. Then we meet again same time for the next mentorship lesson. I'm out, guys.
Thank you, Malida. Thank you so much.
You're welcome, guys. You're welcome.